Hi and welcome to the Market Alert for Tuesday, the 31st of January 2023. So yesterday's headlines: Spanish inflation apparently spurred profit taking ahead of Powell's announcement tomorrow evening with regards to how much he's going to be increasing interest rates. We'll just have to wait and see when that happens, but I find this a very interesting headline. It took Spanish inflation to create profit-taking in the market since October, and despite the fact for the last 3 weeks we've had nothing but hot data as far as inflation is concerned. So amazing. Took the Spanish to actually take the market off the rails, as it were. Other news, hawkish shift in Fed expectation spark selling in bonds, big tech and black gold. Oil, the last few days have seen significantly hawkish drift in rate expectations. This is all the same rhetoric, isn't it, every time? And then as soon as he comes out with 25% base or 25% or 25 basis points, the market will rally, several hundred points and say, oh, actually, it's actually quite dovish. It's just the way it works. Economic news today. We got Chicago PMI and also consumer confidence. They're not out at 9:45 or 10 a.m. They're out at 2:45 and at 3 p.m. They are US news items. Obviously a bit of a glitch in this browser. It keeps reverting back to US time and not GMT, but just a quick refresh brings that back. What we're looking at here is an increasing Chicago PMI, which would be bullish, and also in the consumer confidence as well would be bullish for rates, not bullish for the market. It's again inflationary, and the same with consumer confidence. Normally you would look at this and say, well, this is good, but not in a rate hiking cycle. Okay, let's have a look at the markets for yesterday. Kick off with the Dow. So yesterday we see the Dow moving higher initially and then selling off. I've just drawn in some fib retracements from here over to here, and you can see that we're already at 50% and the 20 moving average there. I've got the 62 below this, and then as you get down to the 50 EMA, you've got the 78 and 89 of that first sort of leg there. Market topping out at 78% retracements. Again, it's going to be dependent on what Powell does. If he goes to 25 basis points, the market will love that and it will go up. If it's 50, it'll be sideways. And if it's 75 basis points, it's likely to move lower. So again, we're just going to wait and see what happens. But yesterday, there was a decline down to the 200 MA in the pre-market session. Then the cash market, they did all they could to bring it back, nearly bringing it back to just 100 points short to the high of Friday, and then it failed and then moved lower, and currently sitting on yesterday's low. So we'll just have to wait and see if the market can get back above this during this morning. I suspect it will give it its best shot and try and do so. In the implied volatility, this up to 17.16, as can be seen here in the 3-month chart. So a bit of a spike up, so an anticipation that there's going to be a bit of volatility. So the options traders marking up the insurance aspect of their options. The implied volatility is that the way that they actually calculate the insurance, just in case it goes against them. So no surprise to see the spike up in this during yesterday. Meanwhile, in the German Dax, remains sideways. Yesterday, what a day, up and down, up and down. Every time the market went down, they brought it back, which I'll show you in a moment. But overnight, you can see the market is sideways to lower as well, below the 5-bar moving average as it closed below it yesterday. In the 30-minute charts, you can see that we were down, then we were up. These are on 30-minute bars. Then we were up, then we were down. Then they kept trying to bring it back, and then in the afternoon they managed to achieve this with no problem whatsoever, bringing the market back to the previous day's close. That's Friday. The DP becoming a resistance, and then the market moving down overnight, but finding support at the moment. Don't be surprised if we have an attack to move back towards the high, because they want to keep this market up just in case Powell does come out with 75 basis points and the markets tank, at least it gives them a chance to get out at a higher price. If not, then watch the low, because that's where the market bounced very well yesterday as far as the DAX is concerned. Meanwhile, in the 5-minute chart, if we just go across to yesterday, you'll see what I mean. The first hour was something else. The market went down. It was as if the central banks had intervened, the way the market rallied back here. It was quite incredible. And then it traded sideways. It did another one, and then they tried to bring it back again. And then it dropped down towards mid-morning. And then from there, it was just a one-way bet. And again, it's as if the whole thing was engineered to bring the market back, because why would you be buying shares ahead of an FOMC meeting? This is derivatives bringing the market back. Instruments that they can gamble with and get out of in a nanosecond. And then overnight, you can see the markets being drifting to the downside there. Bit of a sell-off there. But at the moment, the market trying to make its way back. Like I say, you want to keep an eye on yesterday's high and low. We're sort of just equidistant for both where the market could go. The DP obviously just above here as well as the 50 EMA. In the S&P, also stuck at that 89, and as you can see there, we're below the 5 bar, and yesterday closing below that, and also overnight moving lower. And yesterday we traded down to the 200 MA in the 30-minute chart as well, rallied back up, again came about an 89% retracement to the previous day, or Friday's, there we go, actually less than that, there's the high, I thought it was closer than that. So about 38-50% retracement, and then down we went, and then we're sitting on the overnight low there at the moment, oversold, so we could expect a bit of a bounce there. FTSE, that's the 30-minute one, the daily chart for sideways as it has been for the last few days. A bit of weakness there. We've got more days closing below the 5 MA. Yesterday we managed to bring it back, but overnight the market sitting on this crucial area of both the 5 and the 20 MA. At the moment, in the 30-minute chart, we had the overnight sell-off, and then they brought the market all the way back from 8 a.m. as far as the FTSE was concerned, going against the DAX on occasions, and sitting at the DP overnight, just below the 200 MA as well. So still some weakness around there, but the high not too far off, the low further away. In the currencies, sideways, waiting for Powell. 30-minute chart, we moved lower, and then we bounced all the way back to the R1, and then overnight you've seen the markets moving back to the downside, but not a great deal in range, as can be seen with the sideways move there in the daily chart. In the pound, also sideways. Like I say, everybody's been waiting for the last number of days for Powell, and it's probably going to be one of those non-events, isn't it, as far as the market's concerned, you can just tell. So we got support in the pound. It moved up to Friday's high and then sold off as the dollar moved higher. So let's have a look at the dollar. In the dollar, you can see the last few days we've got green in the candles here in the dollar index, and in the 30-minute chart. So just grab this for you. You'll see we've started to move up from yesterday, 9 a.m. We started to move to the upside there. So the dollar gaining a bit of strength at the moment, which you'd expect with the fact that they're going to raise rates. That's always the case. And finally, the metals continue to trade in a range with silver there sideways. 30-minute chart sideways yesterday. A bit of a shakeout in the last half an hour, which can be seen there. See if they can manage to bring this back. Certainly a bit of buying there to hold the market. Gold the same, got to the last 3 days showing a bit of weakness, closing below the 5 MA, which you would if the the dollar's been moving higher. Yesterday, a bit more volatility on the gold price, and then overnight also seeing it move lower there, but some support coming into the market at the moment. So there we go. Again, the market's waiting for Powell, but we've got a couple of news items today to move the markets. It'll be interesting to see if they can rally the markets back again this morning like they did yesterday. That was a hell of a move back after that initial selling that we saw early on. Okay, that's it for this one. If there is anything major that happens, I will let you know, but otherwise, as ever, thanks for watching. See you in the next one.